Stop what you're doing. Right now, one of the most reliable wealth indicators in history is flashing red, and 99% of people have no clue. Silver is being completely ignored, and that should absolutely terrify you. Look, I get it. Silver isn't sexy. It's not trending on Twitter. YouTubers aren't hyping it. Your friends aren't talking about it at dinner, and that is exactly why you need to pay attention. Because here's the thing, when everyone ignores silver, that's when the biggest moves happen. It's happened before, 2008, 2011, 2020. Every single time the crowd looked away, silver exploded. We're talking 100%, 200%, even 300% gains for those who position themselves early. Right now, we're seeing the exact same setup. Industrial demand is through the roof. Solar panels, EVs, 5G infrastructure. They're consuming silver faster than it can be mined. Meanwhile, the gold to silver ratio is screaming that silver is historically undervalued, yet nobody's buying. Retail sentiment is dead. That's not a red flag. That's a flashing neon sign. The smart money is quietly accumulating while retail investors chase meme stocks and crypto. They know what's coming. The question is, will you be positioned when this thing breaks out? In the next few minutes, I'm going to show you the data they do not want you to see and exactly why this silence is the biggest warning sign in the market. If you're ready to get ahead of the crowd, hit that like button now and let's get into it. Alright, so let's talk about what's really happening here. Because this situation with silver is unlike anything we've seen in recent years, and I need you to understand why the silence around it is actually deafening. You know, there's this old saying in markets that the best opportunities are the ones nobody's talking about, and right now, silver is sitting in that exact sweet spot, where institutional players are positioning themselves while retail investors are completely distracted by everything else that's shiny and loud. Let me take you back for a second. Think about the last time you heard someone at a party or a family gathering talk about silver. Probably never, right? Now think about how many times you've heard people talk about Bitcoin, Tesla stock, or the latest meme coin that's supposedly going to the moon. That contrast right there tells you everything you need to know about where we are in the cycle. Markets are psychological. They're driven by human emotion, fear, greed, and most importantly, attention. And right now, silver has none of it. But here's where it gets interesting. While silver is being ignored by the masses, something fascinating is happening beneath the surface. Industrial demand for silver has been climbing at a rate that most people don't fully comprehend. We're living through one of the biggest technological transitions in human history. The green energy revolution isn't some distant future concept anymore. It's happening right now, today, and silver is at the absolute core of it. Every solar panel that gets installed requires silver. Not a little bit of silver, but a significant amount. The photovoltaic cells that convert sunlight into electricity depend on silver's unique properties as the most conductive metal on Earth. Now, you might be thinking, okay, solar panels need silver, so what? Well, let me put this into perspective for you. According to the Silver Institute, solar panel installations globally are projected to consume over 100 million ounces of silver annually by the end of this decade. That's a massive increase from where we were just 5 years ago. And it's not slowing down. Governments around the world are pouring trillions of dollars into renewable energy infrastructure. The United States alone has committed hundreds of billions through various legislative packages aimed at combating climate change. Europe is even more aggressive with their green initiatives. China is building solar farms that you can literally see from space. All of this requires silver. But it doesn't stop there. Electric vehicles are another massive consumer of silver. The average electric vehicle contains anywhere from 25 to 50 grams of silver, and some models use even more. Now, 50 grams might not sound like much, but when you're talking about millions of electric vehicles being produced every single year, those numbers add up incredibly fast. The automotive industry is in the middle of a complete transformation. Every major car manufacturer has announced plans to go either fully electric or heavily hybrid within the next decade. Ford, General Motors, Volkswagen, Toyota, they're all making this shift, and every single one of those vehicles needs silver for the electrical systems, the battery management systems, and the charging infrastructure. What's really fascinating about the electric vehicle trend is that it's not just the vehicles themselves that require silver. The entire charging infrastructure that needs to be built out to support these vehicles is also silver intensive. Fast charging stations, the electrical grid upgrades necessary to handle the increased load. The smart grid technology that will manage all of this, it all requires significant amounts of silver. We're talking about a complete reimagining of our energy and transportation infrastructure, and silver is woven into every aspect of it. Then you have the tech sector, which has been quietly increasing its silver consumption year after year. Artificial intelligence and data centers are expanding at an exponential rate. These facilities require enormous amounts of electricity and sophisticated electrical systems to manage the power distribution and cooling. Silver is used extensively in these applications because of its superior conductivity and reliability. As AI continues to grow and more companies invest in building out their computational infrastructure, the demand for silver in this sector is only going to increase. Companies like Microsoft, Google, Amazon, and Meta are spending billions of dollars building new data centers to support their AI initiatives and cloud computing services. Each of these massive facilities contains thousands of servers, miles of cabling, and complex electrical systems, all of which incorporate silver. 5G networks are another piece of the puzzle that people overlook. The rollout of 5G infrastructure requires significantly more cell towers and base stations than previous generations of wireless technology. Each of these installations uses silver in various components. We're talking about millions of new installations globally over the next several years. And then there's the Internet of Things, smart cities, autonomous vehicles. All of these emerging technologies have one thing in common. They need silver. The world is becoming increasingly connected and electrified, and every connection point, every sensor, every piece of smart infrastructure relies on the unique properties that silver provides. So you've got this perfect storm brewing where industrial demand is skyrocketing across multiple sectors simultaneously. This is not like the 2000s when silver demand was primarily driven by photography and traditional industrial uses. This is a completely different landscape. The demand drivers today are massive, multi-trillion-dollar industries that are just getting started. We're in the early innings of these technological transitions, not the late stages, and that's what makes this opportunity so compelling. We're not looking at a temporary spike in demand or a short-term trend. We're looking at structural, long-term changes in how the global economy functions. Now, let's talk about the supply side of this equation, because this is where things get really interesting and, frankly, a bit concerning. Silver mining is not easy, and it's not getting any easier. Unlike gold, where about 70% of production comes from dedicated gold mines, only about 30% of silver comes from primary silver mines. The majority of silver production is actually a byproduct of mining other metals like copper, lead, and zinc. This creates a really unique dynamic because silver supply is somewhat constrained by the economics of these other metals. When copper prices are low, copper mines reduce production or shut down, which means less silver gets produced as a byproduct, even if silver prices are high. This creates supply inelasticity that you don't see with other commodities. Mining companies can't just turn on a switch and produce more silver when demand increases. It takes years to develop new mines, and the permitting process, especially in developed countries, has become increasingly difficult and time-consuming. Environmental regulations, community opposition, and political considerations all play a role in limiting new mine development. On top of that, many existing silver mines are seeing declining ore grades. This means they have to process more rock to get the same amount of silver, which increases costs and reduces efficiency. Some of the world's largest silver producing regions, like Mexico and Peru, have seen production plateau or even decline in recent years. There haven't been major new silver discoveries that would significantly add to global supply. The low-hanging fruit has already been picked, so to speak. The reality is that mining silver is becoming more expensive and more challenging with each passing year. The cost structure of silver mining is also worth understanding because it plays a crucial role in determining how much supply can come to market at various price levels. Many silver miners are operating with relatively thin profit margins. When you factor in labor costs, energy costs, equipment maintenance, regulatory compliance, and environmental remediation, the all-in sustaining cost for many operations is higher than people realize. This means that unless silver prices rise significantly, there's limited incentive for companies to invest in expanding production or developing new projects. What's fascinating is that even with industrial demand increasing, we're not seeing a corresponding increase in silver prices that would typically incentivize more production. Why? Because the financial markets haven't caught on yet. Silver is still primarily traded based on its monetary metal characteristics and its relationship to gold, rather than being priced as the critical industrial commodity that it has become. This disconnect between the physical fundamentals and the financial pricing is creating an opportunity that smart investors are starting to recognize. Let's talk about something called the gold to silver ratio, because this is one of the most important indicators that precious metals investors watch, and right now it's telling us something really significant. The gold to silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged somewhere around 60 to 1 over the long term. There have been periods where it's gone much higher, and periods where it's dropped much lower, but it tends to revert to that mean over time. Right now, we're seeing the ratio at levels that historically have marked major turning points. When the ratio gets extremely high, meaning silver is very cheap relative to gold, it has typically been followed by periods where silver dramatically outperforms gold. We saw this in 2011 when silver went from around $18 an ounce to nearly $50 an ounce in just a few months. We saw it again in 2020 when silver rallied from around $12 to almost $30. Both of those moves came after periods where silver was being ignored and the gold to silver ratio was elevated. The pattern is consistent throughout history. Silver gets forgotten, it becomes incredibly undervalued relative to gold, and then when the trend reverses, it moves violently to the upside. The moves in silver tend to be much more dramatic than gold because silver is a smaller market with less liquidity. When money starts flowing into silver, the price can move very quickly because there's simply not enough supply to meet the sudden surge in demand. This characteristic makes silver particularly attractive for investors who are looking for asymmetric return potential, where the upside significantly outweighs the downside risk. Now, I want to address something important here because I know some of you might be thinking, well, if silver is such a great opportunity, why aren't more people talking about it? Why aren't the financial media outlets covering this? And that's actually a really good question that gets to the heart of how markets work and how information flows in the investment world. The mainstream financial media tends to cover what's already trending. They report on what's already gone up, what's already making headlines, what people are already searching for online. By the time CNBC is doing special segments on silver or Bloomberg is writing feature articles about it, the big move has usually already happened. The institutional money, the hedge funds, the family offices, they've already positioned themselves. They don't wait for confirmation from the media. They look at the fundamentals, they analyze the data, and they act before the crowd catches on. Right now, we're in that quiet phase where the smart money is accumulating positions without fanfare. They're not talking about it on Twitter. They're not going on financial news networks promoting it. They're quietly buying physical silver, accumulating mining stocks, and positioning their portfolios for what they believe is coming. And the beauty of this phase is that prices are still reasonable. There's no premium built in yet for all of this future demand that's coming down the pipeline. I also want to talk about what's happening in the physical silver market specifically, because there are some really interesting dynamics at play that you would not see reflected in the paper price of silver on the futures exchanges. There's a growing disconnect between the paper market where silver is traded as a financial instrument and the physical market where actual metal changes hands. Premiums on physical silver products, meaning the amount above the spot price that you have to pay to actually buy coins or bars, have been elevated for quite some time now. Dealers are reporting strong demand for physical silver, with some products experiencing delivery delays of several weeks or even months. The mints that produce silver coins, like the US Mint, the Royal Canadian Mint, and the Perth Mint in Australia, have had trouble keeping up with demand. Meanwhile, the price of silver on the COMEX Futures Exchange, which is where the official spot price comes from, hasn't reflected this physical tightness. This divergence suggests that while financial traders might not be paying attention to silver, actual buyers who want to hold the physical metal are very much interested. This brings up an important point about silver's dual nature as both an industrial commodity and a monetary metal. Throughout history, silver has served as money. It's been used as currency by civilizations going back thousands of years. Even today, many investors view silver as a store of value and a hedge against currency debasement and inflation. With central banks around the world having printed unprecedented amounts of money over the past few years, and with government debt levels at all-time highs, there's a growing concern about the long-term stability of fiat currencies. Silver offers a tangible alternative. Unlike paper money, which can be printed in unlimited quantities, silver has intrinsic value and limited supply. You can't create more silver out of thin air. This monetary demand for silver adds another dimension to the investment thesis that goes beyond just the industrial fundamentals. When people lose confidence in their currency or worry about inflation eroding their purchasing power, they often turn to precious metals. We've seen this pattern repeat throughout history, and we're seeing signs of it again today. Inflation has been a hot topic lately, and while official government statistics might show inflation moderating, the reality that most people experience in their daily lives tells a different story. Food costs, energy costs, housing costs, they're all significantly higher than they were just a few years ago. Real wages for many workers haven't kept pace with these increases, which means purchasing power is declining. In this environment, hard assets like silver become increasingly attractive. People are looking for ways to preserve their wealth and protect themselves against the erosion of currency value. Central banks around the world have been engaged in what can only be described as unprecedented monetary experiments. Interest rates were kept at zero or near zero for years following the financial crisis of 2008. Then we had the pandemic response, which saw central banks printing money on a scale never before seen in peacetime. The Federal Reserve's balance sheet exploded. The European Central Bank, the Bank of Japan, the Bank of England, they all followed similar policies. And while they've been trying to normalize policy more recently by raising interest rates and reducing their balance sheets, the fundamental issues haven't gone away. Government debt continues to grow, deficits remain large, and there's increasing debate about the long-term sustainability of current fiscal and monetary policies. In this context, silver and other precious metals serve as a form of insurance. They're assets that have maintained value over thousands of years, regardless of what happened to any particular government or currency. This monetary aspect of silver is often overlooked by investors who focus solely on the industrial demand story, but it's an important part of the overall investment thesis. Now, let me address the elephant in the room. Some of you might be thinking about the volatility of silver and the fact that it can be a wild ride. And you're absolutely right. Silver is volatile. It can swing dramatically in both directions. This volatility scares away a lot of investors who prefer more stable, predictable investments. But here's the thing. Volatility creates opportunity. Those dramatic price swings that scare people away are exactly what creates the potential for significant returns. If you're investing in silver, you need to understand that there will be ups and downs along the way. The key is to focus on the long-term fundamentals rather than getting shaken out by short-term price movements. What we're looking at here is a multi-year trend that's just beginning to unfold. The technological transitions that are driving industrial silver demand aren't going to happen overnight. They're going to play out over the next decade and beyond. The green energy revolution, the electrification of transportation, the build-out of 5G and 6G networks. With the expansion of AI infrastructure, these are massive long-term trends that will require enormous amounts of silver, and the supply constraints I mentioned earlier aren't going away anytime soon. You can't just build a new silver mine in a year or two. It takes many years and significant capital investment. This supply-demand imbalance is going to take time to play out, but when it does, the impact on silver prices could be dramatic. We're already seeing the early signs with the physical market tightness and elevated premiums. As more investors wake up to this opportunity and start allocating capital to silver, the momentum could build very quickly. Remember, silver is a relatively small market compared to other asset classes. The entire above-ground investment-grade silver in the world is worth maybe a few $100 billion at current prices. That's less than the market cap of some individual tech companies. It wouldn't take that much capital flowing into silver to move the price significantly. Another aspect that I think is really important to understand is the geopolitical dimension of silver supply. A significant portion of the world's silver production comes from countries that have varying degrees of political stability and regulatory risk. Mexico is the largest silver-producing country in the world, followed by China and Peru. Any disruption to production in these countries, whether due to political unrest, labor strikes, changes in mining regulations, or nationalization of resources, could have a significant impact on global silver supply. We've seen examples of this in the past with other commodities, and silver is not immune to these risks. There's also the question of strategic stockpiling by nations. Some countries are recognizing the critical importance of silver for their technological and industrial development and are taking steps to secure supply. China, for instance, has been a consistent buyer of various strategic commodities, and there are indications that they're interested in building silver reserves. If major economies start viewing silver as a strategic resource that needs to be stockpiled for national security reasons, that could remove significant amounts of supply from the market and put upward pressure on prices. The investment landscape for silver has also evolved significantly in recent years, with the introduction of various financial products that make it easier for both retail and institutional investors to gain exposure to silver. Silver ETFs, exchange-traded funds, allow investors to buy shares that represent ownership of physical silver without having to worry about storage and security. While these products have made silver more accessible, they've also introduced new dynamics to the market. Large inflows or outflows from these ETFs can impact the physical silver market as the funds need to buy or sell actual metal to back the shares they issue or redeem. Mining stocks represent another way to gain exposure to silver, and they can potentially offer leveraged returns compared to the metal itself. When silver prices rise, mining companies see their profit margins expand dramatically because their costs are relatively fixed while their revenue increases with the price of silver. This operating leverage can lead to mining stocks outperforming the physical metal during bull markets. Of course, the reverse is also true during bear markets, and mining stocks come with additional risks related to operational execution, management quality, and company-specific factors. You need to do your homework when selecting mining stocks, looking at factors like the quality of their assets, their cost structure, their balance sheet strength, and the competence of their management team. There are also junior mining companies and exploration companies that offer even more speculative exposure to silver. These companies are typically exploring for new deposits or developing early-stage projects. They can offer explosive upside potential if they make significant discoveries or successfully bring new mines into production, but they also carry much higher risk because most exploration projects don't ultimately become producing mines. For investors with higher risk tolerance and a longer time horizon, allocating a small portion of a silver investment to carefully selected junior miners can potentially enhance returns, but it requires careful research and due diligence. Looking ahead, I think we're at a really critical juncture for silver. All of the pieces are in place for a significant move higher. You've got industrial demand that's growing rapidly across multiple sectors. You've got supply that's constrained and not keeping pace with demand. You've got a financial market that hasn't yet priced in these fundamentals. And you've got a broader macroeconomic environment that's favorable for hard assets as concerns about currency debasement and inflation persist. The fact that silver is being ignored right now, the fact that retail investors aren't paying attention, the fact that it's not trending on social media or dominating financial news headlines, this is actually one of the most bullish indicators you could ask for. It means we're early. It means there's still time to position yourself before the crowd figures it out. History has shown us time and time again that the best investments are the ones you make before they become obvious to everyone else. The challenge is having the conviction to act when something makes fundamental sense, even though it's not popular or widely discussed. I've studied market cycles for years, and one pattern that repeats over and over is that major investment opportunities are often hidden in plain sight. They're sitting there with compelling fundamentals, but they're being ignored because they don't fit the current narrative or because investors are distracted by other things. Silver right now fits that pattern perfectly. The fundamentals are screaming that this is an opportunity, but the market hasn't caught on yet. That disconnect won't last forever. So what does all of this mean for you as an investor? It means you need to be paying attention to silver. You need to be doing your own research and due diligence. You need to understand both the opportunities and the risks. Silver is not a get-rich-quick scheme. It's not going to make you a millionaire overnight. But if you approach it with a long-term perspective and you size your position appropriately within your overall portfolio, it could be a very rewarding investment over the coming years. Think about how you want to allocate to silver based on your individual circumstances, risk tolerance, and investment goals. Some investors prefer to own physical silver in the form of coins or bars because they want the security of holding the actual metal. Others prefer the convenience of ETFs or the leverage potential of mining stocks. There's no one right answer. The important thing is to have exposure in a way that makes sense for your situation and that you're comfortable with. The silence around silver right now is not a reason to ignore it. It's actually the biggest warning sign that something significant is brewing beneath the surface. The smart money is paying attention. The institutions are positioning themselves. The fundamentals are aligning in a way that we haven't seen in years. And if history is any guide, this quiet accumulation phase will eventually give way to a period of explosive price discovery when the rest of the market finally wakes up to what's happening. The question you need to ask yourself is this: are you going to wait until everyone else figures it out and the price has already moved significantly higher, or are you going to take action now while silver is still being ignored? The opportunity is there for those who are willing to look past the noise and focus on the fundamentals. Don't let this warning sign pass you by. Do your research, understand the story, and make an informed decision about whether silver deserves a place in your investment portfolio. The pieces are all in place. The stage is set, and the clock is ticking.